from the eastern part of the United States. So
You're the less intimidating Howard.
one could say yes. So, anyways, yeah, I just thought I would hop on to kind of explain what I was saying in the chat because it's not a lot of people talk about it and it's quite obscure. With modern market education. Um, so I'm a big market profile per trader. I was basically taught everything I know about market profile from a guy that was a market maker for 20 years, and things of that sort. But it's something that I kind of held on to, and I've been using ever since I started. Um, but so if you don't know what market profile is, or the actual term is TPO, time price opportunity charts. It looks something like this. It looks very weird, right? If you don't know what it is, I know. Well, my brain was spinning for about 4 weeks when I first started looking at market profile charts. Um, but essentially, it's the equivalent of looking at the market in the same aspect of it's using like 30-minute candles, or 30-minute candles on a chart. Um, and essentially, the entire goal of using market profile is to essentially see where time is spent within the market, in volume and things of that sort. But so what I was saying earlier, and I'm not going to go too deep into market profile because it's it take weeks to explain everything, but um, I'm a big fan of identifying where shorts are in the market. And I'll kind of get into that a little bit here in a second, but um, just to kind of understand, what a short is from a different perspective. I'm sure everyone knows what a short seller is here, but what I was taught from this guy that was a market maker, he essentially he worked markets and took companies. I think it was like 200 companies public and things of that sort. But the way that he explains a short seller in the market is that they're just a future buyer, right? Um, because when you're selling something short, you're selling something that you don't own, right? In hopes that you're buying it back at a cheaper price, right? And the reason why that has importance, especially when you see trapped shorts in the market, is that when shorts try to cover their positions, right? How do they actually try to get out of their position? Uh, the way that they do it is you have to buy something, right? You're buying it at whatever you sold short at a lower price, and that's how you make a profit, right? So whenever there's a short seller that's covering in a market, that requires them to put out buy orders right into the market to be able to cover their positions. So I'm a big fan of using you know ranges in the market where shorts are trapped, right? Meaning in a certain price range you have multiple people that are trapped short because there's multiple you can expect that there's going to be multiple buy orders there, right? So in terms of market profile, if I scroll in here, so the way that you identify um, short trapped shorts in the actual market using market profile is when you see they're called single prints to the upside. So if you kind of take a look here with F, G, and H, you can kind of see that it consolidated here a little bit. Um, can I use this? How do we do this? Draw. Right. So you can kind of see this consolidation period right here with also, a buildup of volume. But when H period opened, right, it broke the high of G period, or the previous 30-minute candle, right, and then you get these single prints to the upside until I period comes back down here, right. So essentially, single prints are just where you have one letter period, which is again the equivalent of 30-minute candle, where you don't have any trading next to it, whether that be to the upside or downside. Um, and when you see these types of you know single prints in market structure to the upside, that's a clear indication that shorts were trapped, right? Because when you see volatile price action to the upside, there's always going to be people that are trying to short it, right? It has to go down, it has to go down, it cannot keep going up, right? So, that's kind of the importance, right? So in these types of single print periods, let's see here. Can I, no, that's move. Right. So in H period here, right, we had single prints. So from 72 to 28 to 71.83, we know that there are trap shorts, right, in this section or in this range of the market. So, if we trade back down to here, we can expect again, because for short sellers to get out of their position, that requires them to put buy orders out into the market, which hold the market up, right? Because if someone's buying something, right, it's causing, to a certain extent, demand to be introduced to the market. And kind of moving up here a little bit more, it's kind of the same idea, right? In I period here, you can see that again, we had single prints to the upside from 72.33 all the way up to 72.62, right? So, when the market kind of traded down here in C period, and this is the trade I posted earlier in the chat, when you trade down, right, to the 72.62, again, as we said earlier, we understand that, we have shorts that are trapped in this range, and we also know that there are going to, most likely going to be buy orders sitting out in the market, with this trap shorts trying to get out of their positions, right? So when we trade down to that level and you see some type of, you fail to print down further into that actual box, that's indicating that there's more buying orders from these covering shorts than there is supply that was introduced up into the market, right? So again, when it kind of trades down, and this was the idea of why I took that trade, is that the risk is pretty minimal. You get long, let's just say 72.65, right? Because I'm not good enough to pin the exact price to get long, but if you get long at 72.65 here with the expectation that there's going to be those buy orders sitting out in the market, and then if you start printing down into those actual orders and they're getting filled, that's essentially telling you that there's going to be there's more supply that was introduced into the market, meaning that all of those buy orders from the trap shorts can now get filled inside of that market or inside of that range. So, in the case of my trade, if we traded down to 72.60 or 55, I would have gotten out of that trade, right? But as you can see, that right when we printed down to that level where the single prints started in the market structure, you can see that there is a bunch of responsive buying at this level. Does that make sense?
Yeah, that's interesting.
Yeah,
Because I've only seen market profile charts like used by very specific people. Like one's Chris Cady.
yeah, it's not very mainstream.
Yeah.
At the end of the day, it's a it's a very weird way of looking at the market.
It's an
Right?
interesting way of how you explain it though, but it makes sense.
Yeah. So yeah, if it makes sense, that's good. If I can add on to that a little bit more, yeah, yeah. So if I, thanks by the way, it's the same idea, right? If you see a gap up in the market, if you look at gap ups in the market, meaning from Friday to, well, let me pull this. Don't know if I can. How do I get out of this full screen thing? Let's see here. Yeah, this is what I want to look at here. Right. So same idea with the ES here. And it's this, the same concept applies on longer time frames as much as it does in shorter time frames, right? So let me see if I can. Okay, so that's excluded. So if we can scroll in here. So if you look here on 316, I can kind of split this out a little bit more. Again, it's the same idea as what we were just looking at, right? So you had the few first 30 minutes of the market, hour and a half of off the open, and then 2 hours into trading, you see this volatile price action to the upside, right? Which again, as I said, it's kind of indicating that shorts are trapped trying to short that move to the upside, and they're just getting their face ripped off on the entire move up. So as you can see here, we did print. So ideally, right, at that time the shorts were trapped from 39.40, but you can see the next day that we kind of had enough supply in the market to trade down and fill some of those orders. But at the same time, the low of that day was 39, 32.25 or quarter, right? So, failure to fill the rest of those single prints from 36 or the 16th
Mm-hmm.
indicates to us that there's, the selling shut off, there's no supply, right? Because really the only thing that moves markets is supply and lack of supply, right? It's basic, just the grade school stuff, right? If a market has no supply, if one person holds all of the rare Pokemon cards, right, they can do whatever the hell they want with the price, right? They can sell it as high as they want, until people are not interested in it anymore. Um, so when you kind of see this type of price action where, okay, yes, it did fill some of the single prints and it did fill some of those buying orders from the trap shorts, there was not enough supply in the market to trade further and fill those single prints, right? Which, being able to see this kind of adds context, as you can see here, from the 23rd and the end of last week, right? So when we had that liquidation period, from the FOMC, and we started trading down a little bit, you know we could not even trade to, we cannot print down to that short position that still exists in the market, right? So
Yeah.
you don't want to be shorting when there's no supply, because you're trying to sell something that no one is willing to sell, right? Which is a bad business plan. That makes sense.
Mm-hmm.
So if you look at my chat on Friday, I said I'm really not looking to short this market with any type of size, but rather just kind of quick in and out shorts, if they
Yeah.
present themselves. But generally speaking, I was more long bias, and you can see that, again, failed to print into that short position, and look where we ended up on the open this morning, right?
Yep. Right back at the high of that.
Yeah, exactly. So um, that's kind of how I look at stuff. Again, it's pretty weird, but it works for me at least. So
No, it definitely makes sense though.
yeah, market profile, but some people also call it TPO charts, time price opportunity charts. Yeah, yeah, no problem. I'm just trying to see here. So I also mentioned something about wholesale, and kind of inventory, right? So again, the guy that teaches me, market maker, he is very big on the idea that wholesale and size traders run this market, and the goal of us retail traders is to identify and catch the moves of these size traders and wholesale traders doing their business, right? um, so you'll see in my chat above, in the or yeah, in the Zoom chat, that I said wholesale is selling off inventory here, right? So it's always kind of important to understand where they are positioned, within the market, because again, they're the ones that influence price, and they are the ones that will move price ultimately. um, and just kind of an interesting way. And you can see this without a TPO chart, but just using volume profile in a bit of context, right? So I don't have a screenshot, but if you look at the trading, of today's RTH session of oil, where you can kind of see on the open at 9:30 that there's a bunch of consolidation, for about an hour and a half, 2 hours, right? And then you start seeing this pretty large move up, right? Volatile move up. If you just kind of put it in the context, right? The entire business idea of wholesale traders is you buy low and sell high, right? It's pretty simple. But the only difference between that premise of wholesale traders and retail traders is that wholesale actually has the money in the inventories of securities and stocks and contracts and things of that sort to move the price in their direction. So something to kind of see here, like I was saying, is with a bit of context, you can see on the move up, right? In let's see if I can scroll back in here. We did have single prints and F period. It's a bit cut off here, but and then we kind of have this consolidation period inside of the market, where you can see very clearly that there's a lot of size being worked in the market. Um, and again, with the context, wholesale was long from under 71. Now they've brought the price up. The market's traded up to 71.50, or 71.60 to 71.80. That's a nice chunk of change if you're long, 10,000 contracts, right? So being able to kind of see these consolidation periods will pretty much tell you where wholesale position or where wholesale traders are positioned, um, and just a bit more, right? So we have that volatile price action to the upside, very thin order book, right? There's not a lot of wholesale traders selling, right? Again, just using volume profile in the context of price action. When you see this thin type of order book here, um, basically these are, again, as we said, this is just volume from people that are either one, getting trapped short, or the retail traders that are selling out of their positions into this move up. But when we kind of look over here at the top, look at the increase in volume, right, in consolidation period, wholesale is selling up here, right? If that makes sense. Again, just using a bit of context, right? And things of that sort, and looking at volume. But anyways, I don't really know where I was going with that last word. It's, but essentially, well, I guess what I was trying to say is, when wholesale has a business plan, right, and their business plan is to sell inventories at a higher price, right? If they're willing to spend the money, and if it's worthwhile for them to hold the market up to sell, they will. So in context of that trade that I took at 72.64, I believe, we came down, there's buy orders sitting down in this range, and we also know that wholesale is selling inventory up here, right? And we've traded up here for hours now, so obviously it's worthwhile for them to spend the money to hold the market up, and they do that by essentially just placing bids onto the market, and they're doing that and also utilizing the buy orders that are from the trap shorts to sell inventory up at these prices. So understanding where wholesale is positioned in the market, it gives you a bunch of context, I guess better context, to your trading, more so on a shorter time frame for the most part, but also on a longer time frame if you uh, so desire to use it. But that, so yeah, so those are just the 30-minute periods, right? So the letters themselves don't really have too much importance. Yeah, again, it's just the same idea as like a candle, right? Each letter period, so R, S, T, U, V, W, X, so on. Those are just representing the 30-minute trading period that occurred. So obviously, this R period is 6 Eastern to 6:30 Eastern. S period is 6:30 to 7, and so on and so forth.
Just curious, is the highlighted ones versus the non-highlighted ones like where it opened?
It
So like look at R. You see how the bottom 3 R's are like gray versus the rest being white and pink?
no. So the gray here, so the white letters and is essentially what's called the value area, or better known as, in simpler terms, the cost basis. So that's where 70% of time has been spent in that trading session. And then
Okay.
and then the gray letters on the outside are the other 30%, kind of outlier, outlying
Outlying price
price
action
action.
basically.
Yes, essentially.
Okay.
Um, yeah. So again, you can kind of see that with the volume profile as
Yeah, I was
well,
gonna
right?
say as soon as you said that, I saw that with the volume profile next to it. You could tell.
Yeah. So
Okay, that's
it's
interesting.
basic. Yeah, you're basically just identifying and using value and cost basis to understand where participants are willing to transact back and forth and do business, if that makes sense.
Yeah,
Basically agreeing on price.
that makes sense. It's interesting.
Yeah. and again, it's a very weird way of looking at the market. Hopefully, the more I post in the Discord, I mainly post in the futures chat. I don't really trade anything else. I trade options occasionally, but um, not so much anymore, compared to what I used to do. Um, but again, I post in the futures chat, so if you're interested in
Mhm.
learning more about market profile, probably learn some stuff from my posts. And
Definitely will.
always willing to answer questions, or at least try to answer questions.
Word.
So, all right, well, that's all I had. So, yep, no problem.
Yo, Bernie, how can we use this with your full port fucking SPX 0